we need to talk about the risk of a potential financial crisis that could be upon us in 2023.
Collapse of the Silicon Valley Bank.
The collapse of another American bank.
First Republic Bank has become the second largest bank failure in U.S. history.
Emergency measures to stop a potential banking crisis.
Usually recessions are preceded by some type of credit incident.
Normal time from an inversion of the yield curve, which was roughly the middle of last year, to a recession is 12 months plus.
After the recent failures of multiple banking giants, the technology industry recording massive layoffs, and the collapse of multiple construction firms, leaving thousands of new homeowners with partially built houses, it has uncovered that there are inherent risks in our financial system. As a project manager for the past 17 years managing multi-billion-dollar projects, there are two things that I've learned from work that I've applied to my personal life. 1. Anticipating risk, and 2. Managing my personal finances. With interest rates rising and economy uncertainty, it can cause a lot of anxiety to the everyday people. So here are 4 things I am doing in readiness for a potential recession or a financial crisis. My name is Chong, and on this channel we talk about productivity, lifestyle and our well-being, and just being prepared to take on whatever life may throw at us. If you have enjoyed the video, smash the like button and subscribe. It will help the channel tremendously. Firstly, pay off high interest debt. Debt isn't always a bad thing. It can be a great financial tool when used responsibly and appropriately. For instance, buying a home without a loan is impossible for most of us. These types of debt are considered good debt. Ideally, they will help build wealth and improve one's long-term financial position. Again, used responsibly and appropriately, of course. In contrast, debt that does not benefit your financial position can be damaging and costly, especially during a recession or when interest rate is an all-time high. For instance, using a credit card with a high interest rate to buy items when you don't have the cash available and not paying off the credit card debt at the end of the billing period is financially destructive. When possible, focus on paying off high interest debt and keeping other debt to a minimum. It may be challenging in the short term, but you'll do yourself and your financial situation a favor in the long term. Also, consider shopping around to balance, transfer and consolidate all your debt to somewhere that is charging the lowest interest rate. 2. Emergency fund. Financial experts recommend setting aside at least 6 months worth of living expenses. This means enough money to cover housing and utilities, necessities like food and personal care items, and other financial obligations like loans and insurance payments. So take the time to work out how much it costs you and your family to get by in a typical 6 months period. It may take a year or even longer to save enough cash to reach 6 months of living costs, and that's okay. Just set the goal and put a plan in place to achieve it. With high interest rates rising, high interest savings accounts are starting to deliver reasonable returns. So do shop around for the best deal, somewhere that is returning the highest interest rate for your savings. 3. Reduce expenses. You probably are aware of this and heard of it many times over. If there is a time to look at how much you are spending on a monthly basis, it is now. Have a look at your bank statement for the previous months or even last year. You will be surprised by how much you are spending collectively. There are a ton of ways to control your spending and develop a budget. The most basic rule is the 50-30-20 rule. Budget 50% of your income for essential living expenses such as rent, bills and groceries. Budget 30% of your income for lifestyle or investment like the occasional dining out, birthday presents, higher risk investments, etc. And save 20% of your income into a conservative cash savings account or your emergency fund. If you are being charged a high interest bad debt, in this case, ideally try to reduce your lifestyle costs and split your savings to try to pay off your bad debt as quickly as possible. And 4. Increase and diversify your income. I've put this last on the list because realistically it may be challenging for most. If you do not have a job or a business, there are many ways to start to make some income. If you would like me to make a video on this, let me know in the comments. But if you currently have a job, now is the best time to discuss with your boss about reviewing your salary to see if there are opportunities for a raise. Obviously, do your own market research to benchmark against what you are being paid. I've done a video link above on how to benchmark your salary. Check this out. Then there is the income diversification, where you seek for a supplementary income stream such as a side hustle using the skill sets you already have. For example, if you enjoy baking cakes, you may consider using your home kitchen to bake specialty cakes on weekends and set up an online platform where you can take bulk orders for weekend delivery. Be creative and think outside the box on how you can use the skill sets you already have to solve a problem in the current market and create an income on the side while working a full-time job. So those are the 4 things I'm doing right now. I hope you've enjoyed the video and learned something new today. Until then, signing off for now.